Hey everybody, it's Charles Eddington here with PRMI. Today is Tuesday, May 5th, 2020. Cinco de Mayo, got my quarantine hair here. Cinco de Mayo finally lands on a Taco Tuesday, and we can't celebrate because of a virus named after a Mexican beer. Just not right. So you're either on the front lines as an essential worker, maybe working from home. If you have an FHA mortgage right now, you're being inundated with offers for an FHA Streamline. Right now, an FHA Streamline, while it might be a good option, there might be a better one. So most people, especially if you have equity, especially if you're working, you're cash flowing, you have good credit, moving into a conventional loan might be the best way to go. And lenders, unfortunately, are not necessarily incentivized to move you into a conventional loan versus an FHA loan for a couple big reasons. One, FHA loans make lenders more money. Two, they're a lot easier to process. And three, there's just more funds available. And so an FHA Streamline, while it might be a good option, might be a better option for your lender than it is for you. So stay with me. I'm going to show you how to cut your mortgage term in half without pulling a penny out of your pocket and without adding a penny to your loan. And the best part is your loan payments won't start for a couple of months.
Okay, so this is an example of what we're doing with a lot of our clients. This is a real life example. Numbers are rounded up just for ease of demonstration here. But this client came to us with a $250,000 loan on a 30-year fixed mortgage with a 4.5% interest rate. 30-year loan. Over the course of 30 years on this loan, the total amount of interest they would have paid was a little bit over $400,000. By reducing their term to 15 years on the same loan amount, drop the interest rate to 3%. By cutting the term in half, we cut the payments from $400,000 to $273,000, which over the course of the 15 years was $127,000 savings. And the great part is, if you look here, the same amount of principal is paid. We just lowered the interest a ton. So if you look at the interest paid over that amount of time, the total amount of interest is all that went down from $180,000 to $53,000. So this guy paid off his loan, or will pay off his loan, in half the time, and will save himself $127,000 worth of interest, which will allow him to retire earlier, or really just be in a better cash position to take advantage. Here's the best part. On this particular loan, and this is what's happening in the bond market right now, we've got the federal government just buying mortgages guaranteed. And so there's actually money available for us to pay for closing costs. So in this example, this borrower's closing costs were about $6,000. We locked him in at 3%, got $6,000 from the bond market to pay his lender fees and title fees, which allowed the loan amount to remain the same. So zero out of pocket, $127,000 in savings, and by closing the loan in May, the first payment due was July 1st. So he was able to skip one payment, and in some cases, we're able to even skip two. So if you'd like to talk about what this would look like for you, talk about how to cut your mortgage term in half and save, for most people, tens, if not hundreds of thousands of dollars, feel free to give me a ring at 541-904-0575, or you can email me at ceddington@primeres.com.